how do you gauge the landscape currently after what arguably seems to be policy continuity with all the major portfolios retained by the BJP and the markets celebrating it thus far, but the world markets maybe slightly skittish ahead of the FOMC. So perfect timing to have you.
I think there was a bit of nervousness on Tuesday afternoon because it seemed like we were going to have a little bit of a problem, but I think things shaped up well. I'm not surprised. I wrote a note overnight on Tuesday that this is continuity and just treated like a majority government. I have great confidence that this administration will basically continue the work of the last 10 years and actually accelerate things. So I think that's the message from the electorate. If there are multiple messages here. There are political messages, which we will not discuss because they're not relevant to the market. And then the economic message is that I think there are a few people that are still behind the poverty line. Obviously, there are. The number has gone down by 10 points over the last 10 years, but there is still, maybe 15% of India that is below poverty line. And to lift them, and this is where I am counterintuitively suggesting to investors who concluded on Tuesday that we are now going to be back to populism. I think we're going to be exactly the opposite. In order to bring those people up, distributing cash doesn't work. Distributing cash has never made poor people rich. Okay, it may win you votes, but it doesn't make poor people rich. What makes poor people rich is you lift the growth rate and therefore create more opportunities. And the BJP-led NDA in the last 10 years, and I keep saying this, is that the Prime Minister is an inflation hawk. So that is what informs all policy making.
Rural incomes not growing at the same pace, the question of unemployment, all of these came up politically and maybe got amplified for political reasons, but I'll leave that aside. The fact is that private capex is also waiting for consumption levels at bottom of the pyramid to grow to that extent. Every theme we talk about is premiumization. What push do you see to make that happen as well, where you have a more sort of secular growth rate?
You mean broad-based?
Broad-based.
Yeah. So let me admit one thing. I think coming out of COVID, we underestimated rural distress. Okay, so I was of the view that rural growth should have turned last year, but it didn't. And it has taken a little longer for the impulses from urban India to slip into rural India. So I think it is happening now, actually. So you can see that in corporate commentary. We have leading indicators which actually tell us that rural growth is improving. You can see it in the two-wheeler data. You can see it in what consumer staple companies reported last quarter. Yeah. It's finally turned. Okay, so that filtering of growth down has happened. Consumption will lose a little bit of share. Investments will gain. Then, as the investment cycle matures and as things peak out there, that's when consumption comes back. So this is not the time when, on a relative basis, again. And rural India reflects most in the stock market parlance. It reflects into consumer staple stocks. They underperform in the 03-07 cycle, and their outperformance started in February 8. So from a stock market perspective, it's certainly not the place to be. You don't want to buy consumer staple stocks. Yeah. I mean, there may be pops and trading pops. And there was one last Tuesday because everybody thought populism is back, and it was a great moment to sell the stocks again and come back into industrials, which took a little bit of a backseat. But I think industrials and financials will lead the pack. Consumer staples will be trailing. So that's from a market perspective. But I think the rural economy is already improving at the margin.
No, so since we're talking about the market perspective, let me take that opportunity. Industrials you like, financials you like. You talked about government capex not being at the same levels. But what about your core sort of infra spends, railways, defense, make in India, all of that? You think continues at the same pace?
No,
were you ever bullish on it?
No, make in India is not government spending.
PLI scheme. PLI scheme.
Yeah, okay. Yeah, so I'll come to that. PLI continues, probably expands, gets even more refined. But the key infrastructure sector that I would be constructive on is railways.
Yeah.
Because that's where all the heavy lifting is now going to happen. The endeavor is to lower India's logistics cost maybe by 30-40% over the next 5 years. And therefore, the happy news here is that we have continuity in the railways, because the outgoing minister and the incoming minister has already done a lot of work in the last 3 years. We wrote extensively about this about 6 weeks ago, about all the changes, and it's dramatic. I remember we had written a report in 2015. The average speed of a cargo train in India then was 20 kilometers an hour. You could cycle faster.